Welcome back, my fellow capitalists. If you looked at your portfolio yesterday and felt a physical pain in your chest, you are not alone. The markets are bleeding. The Dow Jones took a nosedive, the S&P 500 is looking shaky, and the bond market is acting like it just saw a ghost. But this isn't your normal market correction. This isn't just some bad earnings report or a tech CEO tweeting something they shouldn't have. This is different. We are watching a geopolitical showdown that is threatening to break the global financial system. We are calling it the Sell America Panic. You need to understand what is happening right now because this affects everything. It affects your stock portfolio, it affects your crypto bags, and it definitely affects the value of the house you live in. The story that is driving this chaos is so bizarre that if I wrote it as a movie script, Hollywood would reject it for being too unrealistic. We are talking about the United States, Europe, tariffs, and an island covered in ice. Yes, I'm talking about Greenland. Let's set the stage. It is late January 2026. Everyone thought we were going to have a nice, calm start to the year. We have the new One Big Beautiful Bill tax codes kicking in. We have people trying to figure out their deductions. And we have a Federal Reserve that was supposed to be cutting rates. But then the news breaks. The United States is back in the market for real estate, and we are not looking for a condo in Miami. We are looking to buy Greenland. Again. Now, normally, a diplomatic offer to buy territory is just a footnote in the news, but this administration doesn't do footnotes. They do headlines. The reports coming out, and these are the reports that are spooking Wall Street, suggest that the U.S. is using leverage to force the deal. And the leverage is tariffs. We are threatening to slap a 10% tariff on our European allies if they don't play ball. This is a gangster move. It is aggressive, and the market hates it. Why does the market hate it? Because Europe is not just going to sit there and take it. They are going to retaliate. And the rumor that is spreading like wildfire on trading floors right now is that Europe's retaliation won't be about tariffs on blue jeans or bourbon. It will be financial. The fear is that European central banks and institutional investors are going to start dumping U.S. Treasuries. They are going to stop buying our debt. This is the Sell America trade. It is the nightmare scenario. The United States government runs on debt. We issue bonds to pay for our military, our social programs, and our government salaries. For decades, the rest of the world has lined up to buy that debt because the U.S. dollar is the king. It is the reserve currency. It is the safest asset on the planet. But if we start using trade wars as a weapon for territorial expansion, that trust starts to crack. If Europe decides that holding U.S. debt is a political risk, they sell. When they sell, the price of those bonds crashes. And when the price of bonds crashes, yields spike. The yield is the interest rate the government pays to borrow money. When that yield goes up, it drags every other interest rate in the economy up with it. It pushes up mortgage rates. It pushes up auto loans. It makes credit card debt more expensive. It tightens the noose around the entire economy. That is why you saw the market drop 350 points on January 23rd. It wasn't about corporate profits. It was about the plumbing of the financial system getting clogged. Investors are terrified that if this Greenland standoff escalates, we could see a liquidity crisis in the Treasury market. And if the Treasury market breaks, everything breaks. Look at gold. Gold is the ultimate fear gauge. When people are scared of the dollar, they run to gold. And right now, they are sprinting. Gold is pushing towards $5,000 an ounce. 5,000. That is a historic move. It is telling you that the smartest, richest investors in the room are hedging their bets. They are terrified that the dollar is going to get devalued in this trade war. They are buying insurance against chaos. And amidst all of this, we have the Federal Reserve meeting coming up on January 29th. Poor Jerome Powell. The man cannot catch a break. He is sitting there trying to engineer a soft landing for the economy. He wants to bring inflation down and keep employment high. And suddenly, the White House throws a grenade into the mix with this Greenland tariff threat. Think about the position Powell is in. If tariffs go up, prices go up for you and me. That is inflation. If inflation goes up, the Fed cannot cut interest rates. They might even have to raise them. Can you imagine the carnage if the Fed raises rates in 2026? The housing market would freeze instantly. The stock market would likely enter a bear market. It would be a disaster. So the market is selling off because it is pricing in this uncertainty. Investors hate uncertainty. They can handle bad news, but they cannot handle not knowing the rules of the game. And right now, nobody knows the rules. Is the Greenland threat real? Is Europe really going to dump bonds? Will the Fed have to step in and save the day? We don't know. And until we know, the path of least resistance for stocks is down. Let's talk about the housing market because this is where the rubber meets the road for most Americans. We have been waiting for mortgage rates to come down. Everyone told us that by 2026, rates would be back in the fives. But if this Sell America panic continues and bond yields stay high, mortgage rates are going back to 7 or 8%, maybe higher. This is the great housing reset that the bears have been warning us about. If rates spike again, affordability, which is already at record lows, will get crushed. Sellers who were waiting for the spring market to list their homes are going to pull them back. Buyers are going to get priced out. We could see a freeze in transaction volume that makes 2023 look like a boom year. The data is already showing cracks. Pending home sales dropped significantly in December. Inventory is rising in the South and the West, which means homes are sitting on the market longer. If you add a geopolitical interest rate shock on top of that, you have a recipe for a correction in home prices. Now, if you are a cash buyer, this might be great news. You might finally get a deal. But for everyone else, this is a scary moment. And we can't ignore the tax situation. The one big beautiful bill is now the law of the land. We were promised it would simplify things. We were promised it would put money back in our pockets. But right now, there is just confusion. People are realizing that some of their favorite deductions are gone. The corporate tax changes are hitting companies differently than expected. And when you combine tax confusion with market volatility, you get a population that feels poor. And when people feel poor, they stop spending. And when they stop spending, a recession begins. Joe Livornia from the Treasury was out there the other day saying the economy is back and booming. He is trying to calm everyone down. He is pointing to the GDP numbers and the job market and saying, look, everything is fine. And sure, looking in the rearview mirror, the economy was fine. But the stock market is a windshield. It looks forward. And what it sees through the windshield right now is a storm. So what should you do? Panic sell everything? Go to cash? Hide under your bed? No, absolutely not. Panic is not a strategy. Panic is how you lose money. You need to keep a cool head. You need to understand that this is a news-driven event. The thing about news-driven events is that they can reverse in a heartbeat. Think about it. Does the US actually want a trade war with Europe? No. Does Europe actually want to devalue their own dollar holdings? No. This is a high-stakes negotiation. It is poker. Trump is pushing all his chips into the middle of the table to see if Europe blinks. Europe is staring back, hand on their chips. The most likely outcome is a deal. Maybe we don't buy Greenland. Maybe we just get a lease. Maybe the tariffs get dropped. And the moment a headline crosses, the wire saying talks are progressing, or tariffs are off the table, the market is going to rip higher. The shorts will get squeezed, the dip buyers will rush in, and the S&P 500 will erase these losses in days. That is why you cannot sell the bottom. If you sell now, you are locking in a loss based on a fear that might not materialize. You are letting the headlines dictate your financial future. Instead, you should be looking for opportunities. Look at the sectors that are resilient. Energy stocks tend to do well when geopolitical tension rises. Defense stocks are obvious beneficiaries of a more dangerous world. And tech? High-quality tech companies with massive cash piles are not going anywhere. Apple, Microsoft, Nvidia, they don't care about Greenland. They are cash flow machines. If their stock prices drop 10% because of macro fear, that is a gift to long-term investors. And what about crypto? Bitcoin and the rest of the market have been volatile, mirroring the NASDAQ. But remember the original thesis for crypto. It is supposed to be a hedge against the traditional financial system. If the world loses faith in the US Treasury market, if the dollar is being weaponized, where does that capital go? Some of it goes to gold, yes, but a lot of it, especially from the younger generation, goes to Bitcoin. We could see a decoupling where crypto acts as a safe haven alongside gold. Keep an eye on that correlation. If Bitcoin starts rallying while stocks fall, that is your signal that the narrative has shifted. We also need to watch the VIX, the volatility index. It has been asleep for a long time, but it is waking up. When the VIX spikes, it means fear is high. And as the old saying goes, you want to buy when there is blood in the streets, even if the blood is your own. When the VIX hits 30 or 40, that is usually the capitulation point. That is when the weak hands have folded and the smart money starts accumulating. We aren't there yet, but we are getting closer. Let's go back to the humor of this for a second, because it really is absurd. The entire global economy is trembling because of a real estate deal for an ice sheet. It just goes to show you how fragile the system is. We think we have this sophisticated mathematical financial system, but at the end of the day, it is all just human emotion. It is two guys in suits arguing over a map. But that fragility is your opportunity. The market overreacts. It always does. It swings from euphoria to despair. Right now, we are swinging toward despair. The headlines are going to get worse before they get better. You're going to see market crash videos everywhere. You're going to see end-of-the-dollar thumbnails. Do not let them shake you out. Stay focused on the data. Watch the 10-year yield. If it stabilizes, the bleeding stops. Watch the dollar index. If it starts to drop, that relieves pressure on international markets. Watch the Fed meeting on the 29th. That is the Super Bowl for markets this month. What Powell says will determine the trend for the next quarter. If Powell comes out and says, we are monitoring the situation, but the US economy is strong and inflation is under control, that will be the green light for the bulls. If he ignores the geopolitical noise and focuses on the domestic data, the market will breathe a sigh of relief. But if he sounds panicked, if he sounds like he is reacting to the news rather than leading, then we might have more downside. So keep some cash on the sidelines. Be ready to deploy it. Dollar cost average into your high conviction plays. Don't try to time the exact bottom because you will miss it. Just buy good assets when they are on sale. This sell America narrative is powerful, but betting against America has historically been a losing trade. We have the deepest capital markets, the strongest innovation, and the most resilient economy in the world. We have been through trade wars before. We have been through geopolitical crises before. We always figure it out. The Greenland saga will pass. It will be a chapter in the history books that students will laugh about in 50 years. Remember when the market crashed because the president wanted to buy an iceberg? It will be a trivia question. But the wealth you build by staying disciplined during these moments, that will be very real. So turn off the TV. Stop refreshing the panic feed on Twitter or X or whatever we are calling it today. Look at your long-term goals. If you are investing for 10 years from now, does the price of the S&P 500 today really matter? No. What matters is that you own quality assets. We are going to be tracking this story every single day. If the tariffs get implemented, we will analyze the impact. If the bond market stabilizes, we will tell you which sectors to buy. If the housing market finally cracks, we will let you know where to find the deals. We are in this together. The financial world is a crazy place, but it is also the greatest wealth-building machine ever created. You just have to learn how to ride the waves without drowning. So, strap in. The next few weeks are going to be bumpy. There will be volatility, there will be scary headlines, but there will also be opportunity. The Sell America panic is here, but the Buy America opportunity is coming. Be ready for it. Thanks for watching. If you found this breakdown helpful, if it calmed your nerves or at least gave you a laugh, hit that like button. It helps us get this message out to more people who are probably freaking out right now. Subscribe so you don't miss the update on the Fed meeting. Trust me, you are going to want to hear that breakdown. Stay safe out there. Protect your capital. Do your homework. And remember, the market is a device for